AMC, GameStop, and other quote-unquote meme stocks are going absolutely crazy today. But this move is really without any news. As you guys can see from a main headline on CNBC, it's titled, GameStop shares surge more than 30% and is halted in odd trading. AMC shares also pop. Now I want to go over with you guys what my theory is on why this is actually happening, why this could potentially mark a new pivot in the markets where potentially we could see a decent size rebound. I think a lot of it actually has to do with options, but not necessarily a lot of hedge funds purchasing calls in the same way that you would think. At least that's my first impression. Now we have a lot of other things to go over as well. We had initial jobless claims that came out today, which was bad, but in a weird way that is kind of good for the markets right now. As well as that, you did get PPI, inflation, wholesale inflation that did also come out today. So we got a lot to talk about. We do have a Fed speaker later on today, but the markets are looking pretty damn good. So let's dive into all of this key information. If you guys find value out of this video, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the pinned comment to do so for that one. Now without any further ado, let's get to it. So first things first, let's talk about AMC, GameStop, these other quote-unquote meme stocks that are going crazy today. I mean, AMC hit a high of 1370 off of a low of 970. So that was an exact $4 move from the downside. That was a wild move in a very short amount of time. I believe AMC at one point at the peak was up like 30% as well. Now we're only up 17.72%, but the reason why we're actually going up I think is pretty incredible, and I think it's going to be overlooked by a lot of people. So in my personal opinion, you are seeing a lot of calls that are being purchased on AMC today. As you can see, 12 orders totaling $989.8 thousand, positive order value of 89%. Lots of call activity coming through for June 10th, May 27th, May 20th, and even a lot of call activity that expires tomorrow. But it's not just calls that caused this move. GameStop got halted 3 times to the upside and then once to the downside. Beyond Meat got halted. They were quick to halt shares today, even off of very, very small moves. Now, in my opinion, what is actually happening is a lot of hedge funds are starting to actually sell their puts, and that means the market makers can go out and buy the stock that they had to short to oblige for those puts, and that can drive up the price of these stocks dramatically in a very short amount of time. In addition to that, you are seeing calls being bought on the option chain, but when you have this many puts, especially puts that have ran into the money on GME, on AMC, on all these retail stocks, the second those puts are actually sold, the market makers don't have to have as many short positions on those stocks, because after all, if you are buying a put, right, then the market makers, they have to short the stock. Say you bought a $10 AMC put, well, the market makers might have to short stock at $10.10, so then you can buy it at $10. The market makers are not in this game to lose money. So it's like exacerbating a move potentially to the downside, just like options can help with a move to the upside. Once people start to sell their calls, for an example, during a gamma squeeze, well, what starts to happen? Well, the stock starts to go down. Now, like I said, you are seeing a lot of call activity on AMC, on GME, on all retail stocks as well, and I do think this sets us up for a pretty substantial bear market rally. But at the same time, I really don't think this is the opportunity the hedge funds have been waiting for to cover on their short positions. In my personal belief, it's not going to happen randomly on a day like today with very little news to justify it. It's going to happen on a day where there is a huge catalyst for AMC or GameStop that really does help to squeeze out these shorts, and I think that's why you've seen a lot of halts today on GME, Beyond Meat, a lot of other quote-unquote retail meme stocks because the market's liquidity is stretched so low after the Nasdaq has almost fallen 30% since January 3rd, the first day of trading in 2022. Interest rates are through the roof. Stocks are obviously down. Bonds are down. Everything is down. So you're going to be a lot quicker to actually halt stocks. That's just the way the game goes in this market environment. Now let's talk about initial jobless claims as well as wholesale inflation that rose 11% in April as producer prices keep accelerating. Producer prices at the wholesale level rose 11% over the past year and 0.5% in April alone. Weekly jobless claims were a little changed, but continuing claims fell to their lowest levels since January 1970. Now, wholesale inflation rising is obviously not good because when a wholesaler's inflation cost rise and just the cost of doing business goes up, those wholesalers tend to pass on the cost to the end consumers. So it can be a leading indicator of inflation, and I do think a lot of this is, can I use the word transitory? I don't think we're allowed to use that here in 2022. But I think a lot of it is. I think in the grand scope of things, 6 months from now, a lot of the inflation will definitely be behind us in that sense, especially core inflation and also wholesale inflation. And I think the markets are starting to pick up on it just a little bit today, as the markets are actually slightly green. We were down a lot in the beginning of trading, hit a low of 386.94 on the S&P. Maybe this is the bottom. Maybe we flushed out all the way down to 386 and we can finally start this reversal. We'll see. We're still very low at 393.25, but a lot of people are starting to say that this is the bottom. And I think especially after that flush out today, you've seen a lot of people say, hey, we should probably sell our puts. We should probably, get out of these bearish positions now that the market has hit that key level around 385. A lot of people were saying that's really where the quote unquote fair value is for the S&P overall at about a 17 times earnings multiple, which is kind of ironic because something like Clorox trades at 30 price to earnings ratio, and a lot of your more value stocks or consumer defensive stocks that should do well or okay during a recession, those stocks are way overvalued comparatively to tech stocks. We're not even talking in the same ballpark there. Now, this is very interesting. The initial jobless claims, U.S. jobless claims settled just above 200,000, and specifically, it says initial jobless claims rose 1,000 to 203,000 in the week ended May 7th, the Labor Department said Thursday. Economists polled by Wall Street Journal had estimated new claims would fall to 194,000. And then it says claims rose by a revised 21,000 to 202,000 in the prior week. That's the biggest weekly increase since last July. Now, this, I think, is being seen as a positive thing for the markets because the labor market has been so hot, and every single reading that we have gotten, it's like, man, we really need to slow down the labor markets. Well, it's starting to slow down. Yeah, Wall Street expected 194,000 new claims. We got 203,000. By the time this gets revised, like the last one was revised 21,000, this could be much higher. And that is showing that obviously that should help out inflationary pressures, and the labor market is potentially going to start to slow down a little bit, which is exactly what the Fed wants it to do. After all, the Fed's dual mandate is price stability and basically unemployment, right? They want to keep unemployment, maximum employment, whatever you try to define that as, but it's pretty clear that we are at maximum employment right now. Now, you also did have Janet Yellen that came out and said something which was kind of interesting today, and then we have some other things to talk about, which is just absolutely wild, and I don't know if I'll be able to find it actually. Janet Yellen, she is the Treasury Secretary, and she was, it says Yellen, FSOC back stablecoin capital liquidity requirements. She made a couple claims as well. Yellen UST is a real life example of the risk of stablecoins. Absolutely ridiculous what she's trying to say here. But she was the Federal Reserve, I believe, 8 years ago. So before Fed Jerome Powell. But look at this one. Citadel Securities, thank you. At AMC Theaters, our teams in New York and Chicago had a great time watching the new Doctor Strange movie on the big screen last week. They got Citadel. They got Citadel in there. That's crazy. That's crazy. They're trolling us, guys. They're trolling us. What is this? I don't know. Kind of weird. Some people are saying it's very strange how this came out 1 hour ago, and then boom, AMC, GameStop, everything started to rally. It's up for debate what is going on with that, but nonetheless, I thought it was pretty interesting and something you guys would probably like to know. Now let's take a look at AMC's actual short interest. Take a look at the Fed speaker that speaks today. And what to expect for Friday as well, and then we will go ahead and wrap up this video with a little bit of technical analysis. So positive order value is now up to 91% on AMC for the day, 14 orders totaling $1.18 million. The short interest is sitting at 21.38%. Current shares that are sold short up 110.19 million, cost of bar max of 3.54%. Share utilization of 100% and days to cover is sitting at about 3.09. So looking primed for a little bit of a short squeeze if we do get some kind of catalyst here. AMC, and this is a widely false claim, but a lot of people think just when the stock market crashes, like we've seen, that means AMC is going to squeeze for no reason. That's absolutely not the case. You need to see a catalyst in order to see AMC squeeze. Some kind of fundamental good news, anything really that is good news could theoretically cause a MOAS-like event when liquidity is this low. It doesn't take a new groundbreaking situation. It just takes something, a positive announcement of really any form for that matter. Now, the max pain for AMC by the end of this week is $12 per share. That's about where we are right now. If we take a look at AMC, we're sitting at $11.82 per share. It is very volatile today. There's a lot of volume, so we want to see exactly where this thing does end by the end of the day. But it's looking pretty good as of right now. Now, for the Fed speaker we have today, you do have, where's it at? 3 p.m. Fed Daly that does speak. Now, if Fed Daly comes out and says something the markets like a lot, like maybe along the lines of the Fed has tightened enough, they want to kind of see where the data is, that could be a Fed pivot, and that could be very, very bullish for the markets. I'm not really expecting that. I don't have any money directly on that potential statement, but at this point, the Fed wants to slow down the stock market sell-off. When the NASDAQ is down 30% in 5 months, you want to slow that down. All right, now a quick look at the technicals, and then we will go ahead and wrap up this video. Ling Ling, you want to say hi to the camera? Hi. She said hi. AMC did fall down, like I said earlier in this video, under $10 per share to $9.90 per share. Now, we did not want to see AMC under $10 per share. Good thing is, it did not stay under there for all too long. Now we are on the march back up to about $13 per share. That is the next level of support and resistance that we're going to see. If we break out above that, it'll turn into support yet again, and then we can start to make our way back to the 50, 100, and 200-day moving averages slowly but surely. 50-day moving average at $17.52 per share, 100-day moving average at about $18.98 per share. Those are going to be the real levels of resistance that we are going to have to contend with, hopefully sooner rather than later, right? If we do get this bear market rally, like I think we likely will here soon, possibly next week, it might. Fridays are sketchy, just call it that, because a lot of people don't historically like to hold over the weekend when there is a lot of volatility, like we have seen. That's why you usually see those Friday sell-offs that actually come. So watch to see if we do get a bounce on Friday. That would actually be a very, very positive thing for the markets. Now, on top of that, if we take a look at some of the key indicators like the MACD and the RSI was extremely oversold. The most oversold we have been in a very, very long time. So we were definitely due for this bounce. Either way you put it, whatever your reasoning you want to come up with is for this bounce. Technically speaking, we have needed it for a very long time. As far as the MACD as well, that has been extremely bearish, kind of in line with what we see leading up into these big reversals that marks a new trend upwards in AMC stock. The MACD was bearish ever since April 5th. It's now May 12th. So we were bearish for like 6 weeks in AMC. It's been pretty much straight down. So there's a lot of reasons to actually see this bounce, and I think it will likely continue throughout the rest of the day. Probably once we get actually close to power hour, that's when things will heat up a little bit more. Power hour meaning around 3 p.m. So that is going to conclude this video. Hit the like button, subscribe to the channel for Ling Ling. We got to get them started early. If you guys got kids out there, get them started early in the stock market. You feel me, Ling Ling? She says she feels me. Okay, so yeah, that is it. You guys do what you want to do. If you guys want to join the trading community and come trade with me live in real time, link down below in the pinned comment. Get yourself those free stocks with Webull, Moomoo, and Public as well. Link down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.